Hi, I'm Khleif. Each and every week, I record an interview with a thought leader that I know you're going to get a ton of value from. Now, here on YouTube are the video versions of my podcast, Lifetime Cash Flow Through Real Estate Investing. Now, to make sure you get the latest information, please subscribe and hit the notification bell. Let's get started. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I am absolutely thrilled that you're here. And I know you're going to get value from the young gentleman we're interviewing today. His name's Chris Grenzig. And Chris started out in flipping, tried that, failed at it, didn't like it. Tried buying tax deeds, didn't like that. And finally got into multifamily, came home and started with an 8-unit property, then joint ventured into a 100-unit property, then got a job with a group that owns over 3,200 doors and does asset management for them. Chris, welcome to the show, brother.
Yeah, thanks for having me.
Absolutely. So I kind of stole your thunder a little bit, but let's go back and dig a little deeper on the bio that I just mentioned. Mm-hmm. You said you started and you've only started for a few years ago, like January. You're how old?
Yeah, 27. Started, from scratch in January 2016.
Fantastic. So talk about that in your words, your experience of this evolution in real estate. Why'd you get into it to begin with? You've got a finance background, right?
Yeah, so a little bit. So I graduated college in 2014. I was a student athlete, no real direction, didn't really do it properly. So I bounced from my first year. I actually coached Division II soccer. I played Division I, tried that, wasn't really a fan, came back home, moved into the finance world and wasn't really crazy about that. And kind of midway through that process of being in that job, probably about 7-8 months deep, my mom and my cousin bought a flipping course for single family homes, and they kind of dragged me along kicking and screaming, but ended up probably being the best thing that's happened to me in the last couple of years. And that was my first introduction to real estate. The perfect example I give was how little I knew. I thought asbestos was a type of mold going into it. And, so that was kind of my introductory. It was a, 2-3 day, seminar, 10, 12 hours a day. And from there, just kind of caught the bug. And for the next 5, 6, 7 months, me, my mom, my cousin tried to flip houses. And like you mentioned, just completely failed. Didn't buy a single home, didn't put any under contract, spent tens of thousands of dollars and tons of hours putting in time to try to get these things done and just failed. 2 parts of that. One, just lack of execution on our part. I think probably if we had stuck it out a little bit longer, we could have made it work. 2 was just the area we're in. Really high income. I'm from Long Island, New York, so the margins were so fine. It just
thank God you weren't successful at it, brother. Thank God you because then it would have been 3 or 4 or 5 years before we'd be having this conversation on this multifamily podcast. So awesome.
No, 100%. So from there, just through networking and stuff, I met one of the owners for the company. I'm at Toro. And at the time, he had just finished off selling all his properties in Philadelphia. He had bought them all through auctions and they were tax deed properties and introduced us to that. So we gave it a try. We drove down one weekend, drove 50, 60, 70 properties really quick, instantly hated it, came back. It was really rough areas. Just wasn't the right fit. And then came back, sat down with him again. We were just talking. He was raising money for a little 8-unit in Covington, Kentucky. We decided to invest passively with the caveat just saying, hey, can we pick your brain once a week, grab coffee, jump on a call, the whole nines. He said yes. And then from there, it developed into a partnership on another 17 units in that area, another 82 units down in Jacksonville, Florida, which is how we got into the Florida market. And kind of as all this was happening, I flat out hated my job. I was ready to quit without having another job lined up. And luckily, just at the time, Toro is we're a small company and growing then. They were looking really to bring somebody in to kind of coach up through the company, learn their process and then, grow into a larger role. So I was brought in doing grunt work, basically. And then now it's developed into a role where I handle most of, if not all of the Florida region of our portfolio, as well as take on some of the, the debt, the equity, the whole nines. But, it's grown into, $50 million portfolio, 750 doors acquired in Florida.
That you asset manage in Florida.
Yeah. Yeah. Right. So that's
okay.
Amongst other things. But yeah, that's the primary responsibility that I have.
Right. Okay. Well, we haven't really dug deep on asset management on this show, and so, let's pretend they don't. The people listening have no clue what that means. Can you give a high level definition of what that term means and your role really means in this genre?
Yeah, absolutely. So, an asset manager or the asset management is basically the financial big picture managing of the properties you own. A lot of people get it confused with property management, which is kind of the day-to-day side. So we use third-party management for all our properties currently. And basically they handle, the maintenance side, the payroll side, collecting rents, evictions, the whole nines of the day-to-day stuff. But the big picture items where it's, okay, where are we taking this property? What's the business plan? Looking at the rent roll, deciding, what's the renovation scope, how our renovation is going, what we're spending, approving big ticket items, and then looking at the performance of the property on a, weekly, monthly, quarterly, and annual basis, and evaluating as you're going through it, and then making any changes necessary. So just because we buy a property and we have one plan in mind doesn't mean that's the plan we're going to finish the property with. We may make changes or deviate depending upon how certain things are going, or, the market or different vendors, or there's a million different ways that we could change, but it's basically the continual analysis of the property, the performance, and where things are going, and making changes as necessary.
Love it. Well, you said a lot of things, and I want to drill down on some of those things.
Absolutely.
And forgive me, I can tell I'm probably going to have to interrupt you from time to time. Just to hammer home some points. I didn't want to in what you just said, because you gave a great high level overview of what asset management is, and like you said, so many people think asset management is actually boots on the ground, property managing, dealing with tenants and whatnot. And it's not. Most of the more successful people in this business, certainly starting out until they really get a lot of infrastructure, hire third-party property management. And you guys at 3,200 Doors are still using third-party property management. Now, a lot of people, when they get to your level, will bring it in-house because they look at the numbers and because asset management is managing the property managers. It's managing the third-party property managers. And so maybe that's something on the horizon for you. But my position is, why screw with it? If it ain't broke, don't fix it while you're in acquisition mode. So, that's my 2 cents on that. But let's drill down on asset management. So you talk about the business plan. Okay. And guys, those of you listening, you're thinking business plan, this isn't a company. This is an apartment complex. It's no different, guys. You have to have a plan for that property. 100%. So give some examples of some business plans. Give some examples of what that means, in real life here.
Yeah, for sure. So, the plan has to be, detailed and aligned with the vision from, top to bottom. So it's got to be from the owners to the asset managers to the property managers to the investors. Everybody's got to understand what the goal is here. So we're not going to tell our property management, hey, the goal is to own this property for 10 years and we're going to turn around and sell it or 2 or 3, because that's not fair. They're also not going to implement the plan we're looking to do if they expect one thing or another. So the plan is going to include how long we intend to hold the property, the renovations we plan on doing, if any, the way we're going to market the property to potential tenants, how we're going to handle the eviction process, how often we're going to distribute money to investors. What our exit strategy is. Are we going to sell? Are we going to refinance? Things of that nature. It's also going to explain the breakdown of our compensation. So any fees, any profit structure, investors have to understand that. So there's a lot that goes into it, but the big picture is, we're buying this property. Okay, great. What are we going to do with it? And how long are we going to have this thing?
Well said, brother. Well said. Perfect. And guys, just so you know, it's a good idea for you to get to watch webinars of operators that are trying to raise money for a deal, because that's what they're going to present to you, is their plan for the property, their business plan. So let's talk. So you manage the plan. You make sure it's on track. You make sure that you guys are firing on what you've decided to push for, and how you've decided to implement. So let's talk about your renovation oversight. Have you been involved in a reposition on a property yet? Have you done, where you've gone into every unit and done some work? Have you managed that process?
Yeah. So we've done, our typical deals are anywhere from, light to medium value add, doing a handful of units or, 20% of units, all the way down to highly distressed vacant deals. So we've bought several vacant 100 unit, 300 unit properties where you have to go in and renovate every unit because they're down to the studs. So we've had a few deals that have, we've either renovated all the units or 50% of the units, or brought it from, 25% occupied, 60, all the way up to kind of stabilized. So
right. How about you personally, though? Have you, give me an idea, because I'd like to drill down on that a little bit, but sure. I don't want to ask you questions that you haven't experienced yet. Have you been involved in one of these, full property renovations, or and if not, it's okay. I want to drill down.
So in Florida, so far we haven't bought anything like that. Okay. But I can speak to other, because we are a small company, we all have a kind of a finger in all the different pots. But in Florida, our kind of typical deal is buy something that, either long-term ownership or has a lot of meat on the bones, and we'll renovate 50% of the units over 2 to 3 years, kind of as tenants leave. So we're not displacing anybody, and we'll increase the quality of the interior. We'll also do a lot of exterior and amenity upgrades, and then kind of increase the NOI, and then look to
Right. That's the business model. But I wanted to drill down. I wanted to drill down on, forgive me, I totally cut you off there. I apologize.
No, go for it.
I wanted to drill down on the actual nuances of managing a renovation. So, sure. Let's play around with that a little bit. Yeah, we just bought a property in Sarasota last week, 80 units.
Nice.
Very exciting asset. Great area. And really hardly going to do anything to it at all. Sure. So I get it. But I want to add some value to my listeners as to managing a renovation process. And let me pre-frame this by saying, guys, do not anticipate doing this from cash flow. You raise the money for these things. It's a 100%. Newbie mistake thinking you can do it from cash flow. But let's talk about how to manage kind of it can almost seem a little overwhelming. Let's say you've got 100 doors and you're going into every single unit, maybe evicting, evicting 2 or 3 people or 5 people at a time. And you got to do it over a certain period of time.
Sure.
Let's speak to the nuances of how to manage that. Do you have some software you guys utilize? How do you stay on top of that process?
Yeah. So we don't have any software. Most of our stuff is done through Excel. We obviously have the management software. So we use RealPage, which will keep track of, all the tenant activities. So payment, eviction, move out, move in, et cetera. But for the capital side of things, we have several different trackers that we'll use that will stay on top of, how much we've spent per unit on renovation, how much we spent at the property for different exterior things. We'll look at the rent beforehand and the rent afterwards. We'll compare that to what we budgeted and see, are we over budget, under budget? Why is that? Do we need to do a different type of renovation? So we use a couple different type of Excel sheets to just stay on top of that.
Okay. Actually, so that's after the fact. And so that lends me to think that you guys don't do the construction in-house. You actually bring in GCs and allow them to manage that process. Yes?
Yeah. We'll hire somebody, either a GC, or we'll sub it out ourselves. So have the flooring guy come in, the paint guy come in.
All right. And so you do that sometimes.
Guys will actually do some of that work too.
Okay. Well, then that lends itself to the next question or next comment. And that is, it's so critical to sequence this stuff properly. And I can't tell you how often I've seen, renovation projects go where they've put in the flooring and they haven't painted yet, for example, or, and so it's real easy to get discombobulated when you're managing the subs and screw up the sequencing. So that's kind of why I asked the question. I just wanted to bring that up as a possibility. Okay, fair enough. So after the fact, certainly you're looking. So let's talk about money for a minute. Let's talk about the spending. Let's talk, because I know that's probably where you spend most of your time. So talk about what you look at on a weekly basis or on these assets that you manage from the financial standpoint and how you would do that analysis.
Yeah, for sure. So all of our property on sites will do a weekly report, And some of the stuff we look at on a weekly basis is what we're currently occupied and what we're pre-leased at.
Okay, let me stop you for 1 second. What are the reports that you look at? So list the reports that you get from your third-party property managers. So let's start there, and then we'll drill down.
Sure. So we get a weekly report, like I was just starting to describe, every Wednesday of the week. It'll be effective for the Sunday before. Then we get, obviously, the monthly financials every month. And then we'll also get, which there's a more conducive report with that as well. And then we'll get year-end financials. But on our side, we'll take those monthly financials and we'll also look at it on a quarterly basis and run different reports as well. So we'll look at, last quarter versus this quarter. We'll look at last year's first quarter versus this year's first quarter. And we'll do different reports on, are we over budget, under budget? Have we grown? How much have we grown by, et cetera?
Okay. Do you look line by line?
I will look. So line by line is a little, so there's like a repairs and maintenance line item or a payroll line item. If that looks off, I'll then dig in deeper and say, okay, what is, why is this high? And is it, there was a high bonus, or was it, we had to double pay our manager that month, or, so if it's not up to expectation, I'll dive in deeper to each line item. But, we probably have 12 expense categories. I'll look at each category and see how it lines up, and then I'll dive in even deeper, because it might
that's what I was going for.
100 line items overall. So
right. Really that's what I was going for. Just to tell my listeners, as you're looking at these financial reports, what you're really looking for is anomalies. You're looking, if you compare month to month, or like you say, quarter to quarter, you're looking at either a decrease or an increase. And that's when you want to drill down, like you just said. And that's kind of what I was going for with that question. Okay. And so let's talk about big ticket projects that you're responsible for. Roofs on a project, paving on a project. Talk about how you go about organizing and holding people accountable on those things.
Yeah, so a lot is helped with property management. Our property managers will always use somebody that already manages in the area, so they have really good contacts. But we'll also keep them honest, and we'll bring in outside people to bid it out as well. So we always get 2, 3, 4 bids for any project that we do, just so we know we're getting the best value, not necessarily the cheapest, but the best value, because sometimes you may pay more to get it done quicker, or pay more to get a better warranty, especially if you're talking about roofs or termite, treatment, things of that nature. So we'll always look at the process of who we're giving the work to and what type of person do we want doing that work. Is it a big company? Is it a small subcontractor? And we'll have that conversation internally about which route we're going to go. And then we'll also take a look at, okay, we've got these 5 projects. Is there any of these that are a priority over others, or is there certain ones that should be done before other things? For example, we're not going to do a parking lot if we're going to do a big landscaping project, because we don't want to do all the landscaping stuff and have trucks rolling in with dirt and bushes and stuff. And it's like, all right, we just did the parking lot and now we're making it super dirty and clean, not clean. And obviously that's going to happen over time, but why speed up that process if you don't need to? So
same thing we were just talking about on the interiors.
Exactly. It's the exact same thing.
Things on the exterior exactly the same way. Like if you're going to paint the exterior, you're certainly not going to replace the light fixtures on the exterior before you paint. It's the same. All right, love it. Good. So how often do you typically visit an asset? Talk about the communication process with your third party. Do you use the same manager in the whole state, or same company, or you have different ones?
We do it kind of by region. So we have kind of 3 regions we're in: Florida, Mississippi, Alabama, and the Carolinas, and the Midwest. We'll use one for each region. So Florida, yes, all the same manager. As far as visiting, we say on average it's every 2 or 3 months, but sometimes we may go longer than others. We always try to use our trips to maximize, the dollars. So when we go down, we always try to time it with new deals we're seeing, or meeting investors or different vendors or clients. So it's not just, hey, we're going down to just check out the properties. It's, all right, maybe we wait an extra month and there's a new deal we're going to go look at, we can tour as well. So instead of going down for one day to check out 5 deals we own. We're going down for 2 or 3 days. We're seeing our 5 deals. We're meeting with all the staff. And then the extra couple of days, we're meeting brokers. We're meeting mortgage lenders. We're going to tour new properties. We're meeting investors in the area. So we're really trying to maximize our time, when we do make these trips.
Love it. Love it. That was a great insight. And so talk about what you look at when you walk a property on these visits and what sorts of things you might do specific to that asset, not looking at other deals and relationship building, but specific to that asset. What might you do? There's something I'm looking for here. So
in terms of a new property or a current?
No. You're one of your existing assets. You're going to do you're going to show up. What sorts of things might you look at or examine when you're on site?
Yeah, I'm going to look overall for, cleanliness is a big one for us. A lot of properties we buy stuff that just doesn't present well. So we're going to look for, is there trash floating around? Is there things hanging out in the office? Is there, tenants, do they have, crap hanging out on their balconies or in front of their doors? And why isn't that cleaned up? So that's one of the big ones. We're going to make sure, is the landscaping neat? Is the grass trimmed? Once in a while we'll take a surprise trip, but most of the time they know we're coming. So if it doesn't look good when I'm coming, what about the times that I'm not there? So if it's not pristine when I'm there, there's a bigger issue. We'll also we want to examine if we're doing any upgrades for units. I want to see the upgrades when I'm there, make sure everything looks good, make sure, if it's new cabinets, make sure they're straight and level. If they're putting in a backsplash, make sure there's no grout that's out of line. If there's paint, there's no drips, there's nothing on the floor. Make sure that if there is paint on the floor, why? Because it should have been painted first if there's new flooring put in. So we're going to examine all the little minute details because same reason it should be pristine if they know I'm coming. We'll also look at, we're usually going during the day, during a work week. We want to make sure there's not a lot of cars in the parking lot because people should be at work, unless obviously some people work nights, but by and large, 60, 80, 90% of people work during the day. So if there's a large amount of cars, I'm going to bring that up with management, and there could be a good answer, but it's just something I'm going to look for. I want to make sure that all our amenities are working and functional and usable. I want to make sure that the pool is open and clean if there is one, or if it's the right time of the year. Florida, it's almost always open. So big thing. I want to make sure that there's no maintenance stuff lying around that anybody could trip on or hurt themselves with. I want to make sure any materials are locked up. I want to make sure the golf cart's properly secured. Any, hammers, nails, anything is all properly stored. I also want to make sure it's neat because you don't want things being unaccounted for and you're spending money unnecessarily because they can't find, a fixture or things. And if it's properly, stored and inventoried, that shouldn't be an issue. So those are all the little things.
Good stuff. Good stuff. For. Yeah. Awesome. Now I'll add something. Do you spend any time looking at the competition?
Absolutely. Anytime we go drive, part of the asset management is we're continually doing rent surveys every month, at least, if not more frequently.
That's what I was looking for. Good.
So we'll definitely go drive other properties because we coincide a lot of our trips with looking at new properties. A lot of times they're in other areas. So while we're buying a new property, we'll also tour other properties. So we tour it for our existing assets as well as new acquisitions. So we're probably, we own 5 properties in Jacksonville, Florida right now. If we went out there and we were, going to check on our new ones, we're probably driving another 10, 15 properties, both for rent surveys as well as new acquisitions.
Yeah, and guys, this is so critical because you need to know what your competition's doing because you want to outperform them. How well are their staff greeting their clients? What have they done with their amenities? Are they upgrading their amenities? What do their rents look like? You got to mystery shop them. Pretend you're going to rent or something to try to get into some of their units and check them out. It's so critical. You'll get so much insight by doing that. Awesome. That's what I was looking for.
Yeah, just to quickly touch on that too. Because a lot of times our rent surveys will look online and the pictures are the best depiction of the properties, whether it's the one you own or any property, best depiction is online most likely. So going in and actually seeing a property as it normally is going to tell you a lot about what it actually is. Are they power washing a lot or do the properties just look dirty? Is it well, all the same things I pointed out for our properties, I'm going to look at on other properties, because just because it looks great online, most people, especially if they live in the area, are going to go see it first. So if they're at, $100 over and everything is perfect and my property's not, that's a big issue. If it's, the flip side, if I'm like, hey, we seem a little bit high compared to this one, but I drive on and it's just crap everywhere, I'm going, okay, that makes more sense. So definitely want to look for those things as well.
Good. Okay. So let's get into some more personal stuff here now.
Sure.
Great insights on asset management. I know you added tremendous value there, so I really appreciate that. And like I said, it's not a topic we get into as much as we should on the show. So what do you think is the most challenging part of what you do right now?
I think the most challenging part is not pushing too much on upside that you sacrifice community and overworking your on-site staff, because all of our properties have on-site. There's something to be said for, in Florida right now, I think we did a survey, and our new leases versus our renewals, there's about a $75 difference. So you could add $75 if you just non-renewed everybody, but there's something to be said for the reputation you're going to have at that property. So I think there's always a balance on how much do you push, how well occupied, any property could be 100% occupied, just drop your rents by 20%, but you're never going to do that, obviously. So there's a balancing act, that there's a fine line and you're never going to play it right, but figuring out where that line is and getting close is definitely challenging. And it's fantastic for every property.
Fantastic answer. I think that's probably one of the toughest things to deal with in this business is how far you push that envelope without, losing community, like you said, without pissing a bunch of people off and without increasing vacancies, frankly.
So for sure.
Fantastic answer to that question. So what do you enjoy the most about this business?
I think the people aspect of it, I really enjoy, meeting new people, speaking with new people, talking through properties. I think people get too caught up in the number side of properties and forget that, especially as you get to the larger stuff, if you're buying a 10, 20, 30 unit, you probably don't have on-site staff, but there's a reason people focus on, like you mentioned earlier, these are mini businesses, basically. That's why you need a business plan. Businesses are only as good as the people running them. So if you do not pay attention to the people that are running your properties, from the property managers to the on-site to the maintenance guys to the vendors to the regional managers to the owners of the property management to the asset managers to the owners of the companies you're investing in, if you're an investor, all those things matter. So I think not enough people pay attention to the people actually running the deal, and they get a little bit too caught up on the numbers. So the people aspect for me is huge. No,
great answer. And I will tell you, any business is nothing but two things. It's people and systems.
Yeah.
And so people is the biggest part of the equation. So great answer again. So, you're young, and you're going to inspire some of the young listeners on the show here. What words of wisdom would you share with people that are listening that want to get into this business, that are aspiring, that know they want more out of life, that know they deserve more out of life, maybe haven't taken action yet? What would you say to them?
I think action is important with the proper knowledge, and at a certain point, you've got to be willing to take the risk, because these are investments and there is a risk associated with it. I think also a big thing I see with a lot of younger people, and I talk to a lot because we do a lot of local meetups every month and social media and things of that nature, is patience and practicality. A lot of people want to make, especially young people, tens of thousands, hundreds of thousands of dollars today by investing in real estate, because they're on Instagram and they're on YouTube and everybody's flexing and clickbaiting. And as much as that's nice and sexy, it takes time. As anybody who's been in this business for any amount of time, it takes a lot of time and effort. So it's being patient as well as being practical. So I did a thing the other day about, if you can build up your cash flow today, $200 a month, but you do that over 5-10 years, that $200 a month today doesn't sound like a lot. It's probably not changing anybody's life, if anybody. But if you consistently do that every 2, 3, 5 years, in 30 years, you're going to build up a ton of equity and a significantly larger cash flow. So I think
I tell people from stage, listen, this is not a get rich quick business, but it is a become super freaking wealthy over time business.
Absolutely.
Period. Yeah. So awesome. So what motivates you, buddy? You were obviously super driven. And by the way, before we recorded, I asked you what your superpower was and if you were more analytical or more outgoing. You said you're a nice blend of both. You know, I was listening. I was listening before you answer my question. I'm sorry, I want to derail for a second here. I was listening to Tim Ferriss's podcast, which I love. And he was interviewing Charles Koch, which is the super billionaire. One of the brothers just died. I think they're worth $40 billion a piece or some crazy number.
Crazy.
And he said that his secret to his success was focusing on his strengths and aligning for everything else and hiring and aligning for everything else. So, you know, you guys have heard me on the show talk about, you know, if you're more analytical, align with an outgoing person. If you're more outgoing, align with an analytical. Now you're a great blend of both. But I just wanted to share that because it was on top of mind. But answering my question, what drives you, brother?
Yeah, I think freedom is a big one. I think people talk about financial freedom and they focus too much again on the numbers and the dollars and what's my net worth and how much am I making. I think the financial freedom aspect that nobody focuses on is it's the freedom to do what you want, when you want, with who you want, how you want. And I think that's a large goal of mine. I think I also enjoy just the business aspect of it. Like I have no problem putting in 12-hour shifts because I enjoy it. But I think getting to that stage and the process of getting to that stage is super enjoyable, and being able to share that with other people is something I've definitely found very enjoyable in the last 3, 6, 12 months. And
good for you.
That is really rewarding. And
I know you're starting a podcast. What's the name of it again?
It's going to be called the Real Estate Investing Experience.
The Real Estate Investing Experience. Awesome. Yeah. So a little plug there. And we'll put all his contact information in the show notes. Thanks for being on the show, brother. You added a tremendous amount of value. And really, next time you're in Sarasota, since you're in the region, let's grab a bite to eat or something. Because
absolutely.
I enjoy continuing this relationship. All right, my friend. Be well, and we'll talk soon.
Perfect. Thanks for having me on.
All right. See ya.
Hey, thanks for watching. Please subscribe to my channel. And if you listen to podcasts, join me on iTunes, Stitcher, or wherever you listen to those podcasts. Just search for Lifetime Cash Flow through Real Estate Investing.